Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the John Deere and Company's quarterly earnings for the third quarter of 2023. We are going to see how these earning release is likely to impact the prospects of company share price from the perspective of short term, medium term, as well as from the long term. If we look at the earnings, we have seen that the company has delivered a robust growth in its profit. Its various segments are performing quite well. But despite that, if we look at the share price in today's session, it is trading 4 percentage points lower, and that I think is attributable to the concerns of the investors regarding the durability of these ongoing profit growth. Though the company has delivered robust growth, the investors are still concerned if it is likely to be sustained or not. So we will look at the earnings and go into the minor details, and then afterwards we will also consider its technical charting pattern to look at the emerging opportunities for us to trade on. This is the company's third quarter press release with this income statement. We can see which segments are performing well and which segments are not so. First, we will take a look at the highlights of third quarter 2023 results. If we look at the net sales and revenues, these are significantly higher. As you can see, the 12% profit growth is there, with revenues rising from US dollar 14.102 billion to US dollar 15.801 billion. So this is quite remarkable, with its various segments performing quite well. If you look at the net sales, the equipment operations, there is the growth of 10%, and other income is coming from financials. The net income is up for this quarter significantly by 58%, and the EPS is also topping the analyst expectation. Now let us look at the more details from the company's SEC filings. We will have to, I think, go on the lower side to see its income statement. This is the third quarter income statement. All right, let me zoom in a bit so that we can look at it in a better way. Now, if we see these segmental results, the production and precision agricultural net sales are up with growth of more than 10 percentage point. If you see, almost all its segments are performing better than a year back. For this 3 months quarter ended July 30, 2023, there is growth all around. Its financial revenues are up. The other revenues are also up, with this growth attributed from 3% to whopping 45%. Various segments are performing in this positive way. The operating profit is also up with growth of 38%. That means its cost has gone down in comparison to the revenue growth, and as a result of that, the operating profit is rising, the margin is getting better. To some extent, this was anticipated, because if we consider the share price for last couple of weeks, the share price is trading significantly higher compared to where it was a couple of months back. So you can even say that these expectations have been fulfilled. Now we have to look at the future and what the future holds for the company. And to that effect, we also have to rely on its forward guidance and what the company is saying in its forward guidance is also material. Let us see what the company is expecting for the fourth quarter of this year. These are all supplemental information. All right, I think we have to now look at the highlights. These are segmental operations, and we can also consider which segments are performing better or worse. And as I said earlier, almost all the segments are performing better than was the case a year back. So for production and precision AG, we have this growth of 12% with revenues rising from US dollar 6.096 billion to US dollar 6.806 billion. That is revenue growth of 12% with operating profit also rising substantially. Small AG and TAR, here, the revenue growth is lower. The revenues have risen only 3 percentage points, but growth is a growth, and even this is, I think, quite good. Not as good as is the case for other segments, but still. And is the picture, the spread of companies' operations are on all the important continents, and not all the continents are performing equally. We are seeing that the major growth for the company in Asia and Turf is coming largely from the US and Canada and Europe, whereas other three continents are contributing in a negative way. Small Asia and Turf, the operating margin is higher. Construction and forestry, here also the sales growth is there with net sales rising 14% for the third quarter. Now let us see company's forecast. So this is the FY 2023 forecast, full year forecast it is. The net income the company is expecting to be in between US dollar 9.75 to 10.0 billion, and the tax rate is expected to be in between 21 to 23%, with operating cash flows expected to be in between US dollar 10.5 to 11.0 billion. So this is the forecast, and this is also topping the analyst expectation. So nothing is in the financial statement which should be disappointing, but you have to read in between the lines as well. And there are also some factors which the company's quarterly earnings is going to miss. So overall, the mood of the market is telling us that all the good things are being priced in, and now we also have to cast our eye on the possible chinks in the armor, and that is where I think the lower share price is pointing to. Now, if we look at the charting, the daily charting, you can see that the company's share price had risen almost 20 percentage points from the low of May end to the high of mid-July. The second half of July saw the high at 449.894, and from there on the share price started to consolidate, and now finally we are looking at the decline with the large drop happening in today's session itself with the company share price trading almost close to 5 percentage point lower at the moment. Now there is nothing really to say that the company's prospects have turned bearish. One thing which we need to watch out for is this immediate swing low, which now seems to be giving way. So that will open up the door for further correction on the lower side with these prior swing low coming into focus. But I think the stabilization is likely to happen and we are likely to see a broader consolidation for the company in coming weeks. So my expectation for the share price of the John Deere in company is that it is likely to consolidate in this range with the immediate swing low, not likely to be breached in near term. So if you are someone looking for the trade for a short-term perspective, then I think even now, if we see that in next couple of sessions, not today, if we have the stabilization consolidation, then we can indeed look for opportunities to buy with lower time frame also playing a broader role. Now that we have this break below the immediate swing low, what we have to consider is this immediate swing high. So with immediate bias, the short-term bias remaining bearish, we can profit from the shorting if your outlook is for next couple of days. But if you are a swing trader and you are looking from a medium term perspective, then shorting is not really going to be a wise call at the current level. So we will have to wait it out for the small rally at least from the current levels or from the lower point, and then whenever we have stabilization we can adopt a sell on rally approach as well. So from short term perspective the outlook is bearish, but from medium term to long term the things are not exactly bearish at the moment with the formation still of higher highs and higher lows unless the immediate swing low is broken. But from the short term, the formation is now clearly of lower lows and lower highs. So all we need to do is wait for the next opportunity where we see that now our time is there and we have favorable risk reward ratio, so we can take our bait and go for that trade with the expectations of continuation of this bearish momentum in aftermath of quarterly earnings from Deere and company. So that's all from my side for today's session, where we looked at the fundamental as well as the technical side of John Deere and company's share price. And as I said, the operation part is quite robust, but some concerns are still cropping up. And given the high valuations of the company, the short-term correction can't really be ruled out. So this correction can also deepen for next couple of days. So that is the minimum I can say at the current juncture, looking at the bearish momentum prevalent at the today's session. Thank you all for joining in. If you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. I'll be back on Monday with an equally interesting stock to look at and consider its prospects. So do come back. See you next time around. Thank you all for joining. Goodbye.